Hello, we are here today to talk about Chapter 2, which is where we're going to start learning the different financial statements. So we're just going to look at the portions of the financial statement, talk a little bit about what goes on them, how they're set up. I would suggest you have a set of financial statements out in front of you as we talk about them. Also, in some separate non-PowerPoint type videos, I'm going to go through the set of financial statements in the books and kind of point out to you, okay, here's you total this, here's where this column goes. So if you're having trouble relating to these financial statements, you might want to check out those videos too. Okay, so what are we going to learn? Well, we're just going to get an overview of what goes on these financial statements. They're not totally strangely different from your regular sets of financial statements, but they're a little more detailed, they're more involved. It makes sense. You're reporting on taxpayers' money. You know, you've taken this money from people. How did you spend it? What do you do with it? You're supposed to provide certain services. Are you doing that? Are you taking good care of the people's money? Right? So all of this is part of why these financial statements are maybe more detailed, broken out into separate funds. And, you know, it fits in with the purpose of the entities. All right, so we're going to understand who has to report, like what different entities are there, what are the basic structures. The slides are just going to emphasize some basic points. Again, I would suggest you have some financial statements out, or maybe your book where you go through those sets of financial statements for the city of Salem. And then again, later, I will make some videos that you can look at that just go through the financial statements. I'll have the camera looking at the statement and I'll kind of explain it to you. So this is the overview of these financial statements. Alright, so we're going to be looking at what we call CAFRs, Comprehensive Annual Financial Reports, and that's what probably most of the financial statements you'll see will be CAFRs. When we get out into the not-for-profits, there might be some 990 IRS forms that we'll look at, but this is basically what we're learning, how to read and a little bit about how to prepare. These financial statements are kind of the point of this class. All right, so there is some minimum reporting that could be allowed. Let's say you're a very small school district or something, you had one school or something, maybe you would just do minimum reporting. So you're a very small town, but smaller than Kingsville. I mean, you'd have to be a pretty small little village. So what we're going to learn is the CAFR. If you ever were to encounter some very small town, some small school district, something like that, you know, it would just have less information. It should still have financial statements. It should still have supplementary information. In theory, they wouldn't have anything to really combine. So if you're just like one little school district, you wouldn't have a bunch of stuff to combine like the state of Texas has. Not just East University, but those universities fall under a system. Then they also have all the state offices for everything: Child Protective Services, DPS, transportation. Right? So a very small place is not going to have so much to combine, which kind of makes sense. The CAFR has three main sections: an introduction, a financial section where all the financial statements are. Obviously, we're going to spend most of our time on that, and a statistical section. So unlike a public company's financial statements, these CAFRs will contain a section in the back that has just all kinds of interesting statistics. Like if you look at the city of Kingsville, they have things like, you know, how many arrests they made, how many tickets they wrote, just all the little details of the town, how many new water hookups they did, right? So stuff like that about running the city, and the CAFR will have that, whereas we're not really used to seeing this kind of non-financial reporting. So the introductory section, if you're going through, if you have a financial statement in front of you, you'll see that there's several pages up front that are kind of things like, you know, these are the financial statements for this city or this state or school district, whatever you're looking at. There'll be a letter of transmittal There'll be some org charts, just some general stuff that tells you, okay, what are we looking at? What is this about? Right? Then there's the financial section, and this is really what we're going to be mostly concerned with in this class. Not so much the MD&A, the Management Discussion Analysis, but that's similar to your public companies and other entities that you've already seen. If you've looked at a 10K for a company like Target or Walmart, you've seen this MD&A. Same thing, auditor's report. If they're audited, there'll be a little statement up front from the auditors that says we've audited them. They conform to US GAAP, or they don't, right? They're misstated. There'll be some notes and some supplementary information, and maybe some combining statements. Certainly, like if you're looking at City of Kingsville, I don't think they have any combining statements. But if you go look at the state of Texas, I put one of those out there. If you look at the state of Texas, there's a lot of combining statements out there. Just depends on how big a governmental entity we're talking about. Then there's a statistical section. The auditors don't audit. This is just sort of a report of what's going on with that city, that school district. You could imagine Texas A&M Kingsville, maybe our statistical section. I actually don't think we have one. I think we do minimal reporting. But our statistical section might say something like how many students, how many we graduated, how many grants we got, just different things like that tell some interesting stuff about how we're doing our job. Generally, they'll have 10 years of information. So if you go look at that City of Kingsville, I think you'll see that they report, okay, what were our last 10 years of tax revenues? How much was property valued at? How much revenue do we expect to get from that? How much do we really get for that? And for each year, going back 10 years. So it can be pretty interesting. It can be pretty helpful. The statistical section has to have some separate categories: financial trends, revenue capacity, debt capacity, demographic and economic, and operating. So who reports? What makes something a government entity, right? So in business, generally you'll just see one big set of what we call comprehensive consolidated financial statements. So if you have a wholly owned subsidiary, you won't see information on them broken out, right? So just like, Facebook owns Instagram, right? So I'm sure Instagram has its own separate stream of revenues and expenses and its own assets and its own liabilities. But if you look at Facebook's financial statement, it just says Facebook and all the revenues, expenses, and you don't know what came from Instagram, what came from Facebook. And they do that on purpose because they don't want you to know, maybe, especially competitors. However, with governments, we have to include everything that kind of is part of the government, and we sometimes have to separate it out. So sometimes they have to make their own financial statements, and sometimes they become a component unit, but it's still separate in a separate fund, right? So if a primary government is financially accountable for another entity, that component unit must be included as part of the primary government report. So here at Texas A&M Kingsville, we do our own financial statements, and then they get kicked up to the system, and the system prepares financial statements. And if you go look at the state of Texas, you'll see a component entity that says colleges and universities, and there's a column, and so that includes all the millions of dollars in assets and liabilities that belong to all the universities. Now, you can go to the back of the state of Texas and you'll see where they break out each system and they have the financial statements. So that's what we mean by a component. It's a part of another governmental entity. So that means, everything's going to be out there. You can't hide something. So Facebook can hide a bunch of losses from Instagram. If Instagram started losing a bunch of money, they can kind of hide that under the parent company and say, these are revenues, these are expenses. You don't really know if it's Facebook that's losing or Instagram that's losing, but with governmental entities, you can tell this, they're required to report them. All right, so what makes something a component unit? Why is Texas A&M Kingsville part of the A&M system, and why is A&M system part of the state of Texas? Right? Well, there should be some kind of relationship. The primary government controls the other organization's governing board. So for Texas A&M system, our governor appoints the Board of Regents. So it's part of the state of Texas. It's very clearly part of the state of Texas. The other organization is fiscally dependent on the primary governor. So they're not totally fiscally dependent on the state, but a lot of the money for Kingsville and all the A&M system universities, a lot of that money comes from the state. Next, the related organization must represent a financial benefit or burden to the government, right? So we bring in money from grants, we bring in money from tuition, fees, renting out space in dormitories. So certainly we provide benefit, but certainly we're a very big expense. I don't think we cover our expenses, to be honest with you. I haven't really looked that closely at our financial statements, but I'm pretty sure the state kicks in a good amount. All right, so here's an example where they're talking about financial burden or benefit. And so in this case, the school board operates the public education. The city appoints a majority of the board members, approves the budget request, provides significant funding. So the school board in Charlottesville is part of the city of Charlottesville. It's a component of the city. Here in Kingsville, we don't do it that way. They have their own separate board that's elected separately. So they would have City of Kingsville is completely separate from school board for Kingsville ISD. That's why ISD is their independent school board, right? All right. So here's another idea. Here's some fiscal dependent. Parish Fire District. Parish Fire District is a component of Baton Rouge, the city of Baton Rouge. Why? Because Baton Rouge, they don't necessarily have a board like a school board does, but well, I guess they do. They appoint a majority of the board members, and they have the right to approve the rates and changes. So the city council is responsible for the tax rates and the changes, right? So they do have some fiscal dependence, and that makes them a component issue. All right. So, okay, so now we understand, okay, some things are components, right? Texas A&M Kingsville is a component of the Texas A&M system. Texas A&M system is a component of the state of Texas. Great. So how does that get shown in a CAFR? Well, most of the time it's going to be what's called discrete presentation. So if you were to look at the state of Texas, they don't separate out Texas A&M Kingsville, but they do have a separate column in their funds for the universities. So that technically we call that discrete presentation. Sometimes a component is not a very big part of the government that's reporting. But it is a separate component, but then it'll just get blended in with all the governmental funds. So the example on this slide is a library. So I can see, yes, the library is a separate component. It may even have a library board that chooses what books and who gets hired. It may have some fees that it earns and some money that it spends, and that's up to the library. So it's kind of totally separate, but it's not a very big part. They don't get any money that the city doesn't give them. They can't spend any money the city doesn't approve. So it's just kind of part of the city's general funds. All right. So let's assume that the city library meets the requirement for separate funds. So they're going to be either discrete or blended. All right. So what is required in these? So if you got a set of financial statements from a corporation, you kind of know what to expect now. You know there's going to be a income statement, and then there's going to be a statement of changes in owner's equity. There's going to be a balance sheet, and there's going to be a cash flow statement, and that's it. That's what there's going to be. A full set of GAAP compliant financial statements has 4 financial statements, and they're for the main entity, the parent company. They're consolidated. You're not going to see separate columns for Facebook, separate column for Instagram, separate column for WhatsApp. It's not going to be separate funds. So you're just going to see one set of financial statements. All right. And there'll be some management discussion analysis up front, things like that. Some words around either side of the financial statements. But pretty much that's what you get. So for state and local governments, if you were to go pull an annual report, which hopefully you've got one in front of you, you'd see it has certain components. First of all, management discussion and analysis, so the MD&A, just where they talk about some general information about the financial statements and risks and things like that, what's going on last year financially. Next, you'll see the set of financial statements. So instead of income statement, statement of owner's equity, balance sheet, and cash flow, what you'll see are 2 separate groupings of statements. You'll see first what's called the government-wide financial statements, and then you'll see, so you got government-wide, and then you'll see for each type of fund, right, category of fund. So you remember we talked about there's governmental type funds, proprietary type funds, fiduciary funds, and each one of these types can have several different funds beneath them. But the government-wide sort of ties these together, right? So, in other words, if I wanted to see, well, what's going on with the city at the city water department, right? If the city runs the water and the city runs the electric, well, those would be proprietary, right? It's because they're kind of like enterprises, right? We talked about enterprise funds, so you'd have the water department, the electric department. So those would be under the proprietary funds. And you could find a statement of net position, a statement of revenues, and a statement of cash flows for those proprietary funds. And the same thing can be said for governmental funds, so just the kind of general governmental stuff. And they get combined in the government-wide financial statements. So you got this whole bunch of financial statements maybe, because you might have a bunch of different things going on with funds. And then you've got your fiduciary funds, which are your separate types of funds that are completely in trust for something else. Think pension funds. That's what I typically think of, pension funds. Then you got your notes and your RSI, your required supplementary information, and with all that stuff, with the interesting statistics. And sometimes when you have a lot of proprietary funds that are components of the financial statements, you will see their financial information back here as schedules in the RSI. So if you went to the state of Texas, you looked at Texas government-wide financial statements, and you looked at the proprietary funds, you would see universities, but then you could go back to the RSI, the required supplementary information, and you could see Texas A&M systems information and how much revenues they had from different sources. All right, so the process is this fund stuff gets, transactions happen within each of the funds, within each fund, within each type, right? So there's governmental funds, proprietary funds, right? Business-like activities, and then there's your fiduciary activities. So you got your general governmental stuff running City Hall, maybe the library or something that's not separated out. You've got your proprietary funds, so those are business-like activities, so water department, electricity, could be police. I mean, they do have revenues, they do have expenses. Could be the library. It just depends on how how big these separate components are, really. So you got your government, you've got your proprietary, which is your enterprises, and you've got your fiduciary, which is the stuff held in trust separate, right? Like the firefighter's pension, the police pension, city employees pension, bond retirement funds, things that can't be spent for anything else. It's held in trust. All right, so the transactions occur in the ledgers, right? And we prepare these fund-based statements, right? These various fund-based statements. And then there's this reconciliation, right? Because these are done on a modified accrual basis. We talked a little bit about that in chapter 1. We'll talk about it more in the future, but just so you know, these aren't quite a straight up accrual basis, because remember, when do we recognize tax revenues? When we say they're due, when people pay them, when they owe them, when we collect them. When do we put down expenditures, depending on what it's for, right? So we use this modified accrual method, but these financial statements, the government-wide, they're prepared straight up accrual method, so we have to do a little bit of jiggering around with figures to go from modified accrual to accrual basis, right? So to change these fund financial statements to government-wide, we have to do, well, quite frankly, some adjusting entries. All right, so a lot of this stuff comes later, modified accrual, adjusting entries, that's all later, but just keep in mind, we're doing transactions all along in the various funds, right? No debits or credits across funds. Everything happens within a fund. We prepare that fund statements, and then they get combined and they become government-wide statements. All right, I'm going to stop right there, and then when we come back, we'll start talking about